Hello, everyone. Welcome to today's special presentation on Time is Money. How much is your AP process really costing you? My name is Angela Tice. I'm the National Membership Chair for the CFO Leadership Council, and I will be facilitating today's session. So I just want to do a little bit of housekeeping before we actually get started. You might have noticed that your lines are muted, and that's really just so that there are no distractions. However, we certainly encourage your questions and your comments for today's discussion, so please feel free to type your question in the questions area, and I will be sure to ask those questions on your behalf. I'll be monitoring that area so that we can absolutely address your concerns. We will hold all of our questions until the end, but please do put your questions in there as you're thinking of them, and I will make sure to ask those of our speakers. If you are a member of the CFO Leadership Council, you will receive 1 CPE for today's webcast. Now, to receive credit, you must be a current member and you must answer 4 of the polling questions that we asked you today. We'll interrupt the discussion to bring those to you and give you a chance to answer. So please do answer those polling questions. And I will say, even if you are not looking for CPE today, we would love for you to answer those questions just so that we can get your input and understand a little bit more about our audience. Now, in order to answer the polling questions effectively, if you are looking for CPE and you want to answer the polling questions effectively, you must be logged into today's session. So if you've dialed in and you want to receive CPEs, you need to hang up and use the direct link provided to you at registration. So in other words, you need to be on a computer in order to get those CPEs and answer the polling questions correctly. For almost a year now, the CFOLC has pivoted to help support our community by keeping you as connected as possible. We hope you're going to take advantage of all the virtual programs across the chapters and nationally, like today's discussion, so that you can really stay connected with us. And there are a full list of programs that can be found on our website, and CPEs are offered for current CFOLC members. If you've not signed up for our national conference, there are those were the 2 upcoming events that are coming up. And our national conference is June 7th through the 9th, and we've named this one A New Hope. Just the name alone should inspire you to engage. We're really looking forward to this. Registration is open, so do take the time to see what is in store and definitely sign up. I know that you will enjoy the speakers that we have set, and the conversations are just fantastic. So please do sign up for that. Now, if you're a guest today and you're wondering how to become a member of the CFO Leadership Council, you can certainly connect with me after the webcast. We do have different opportunities of engagement, and membership does start the day you join. So again, going back to those CPE, if you're looking for CPE, you end up joining today, you would end up getting CPE for today's webcast. Finally, I just want to mention that most of our webcasts are and virtual discussions are recorded so that our members can check in and either listen again or listen to those that they may have missed. At this time, we do not offer CPE when listening to the recordings, but there's such great information up there, so you definitely want to go check that out and see what you might have missed. While you're in that membership portal, don't forget to look up our partners. They are in there, and many of them have virtual offices where you can visit and find excellent information in a vast amount of areas. And you can reach out to them directly if you have any specific questions or needs. So definitely check that out. So that's really it for the housekeeping, and I'm glad to get through that because I am really so glad to introduce our speakers today. We have Chris Doxley. She's the president of Doxley Inc. And Chris has spent over 25 years at Hewlett-Packard and Verizon in senior P2P, logistics and finance and accounting leadership positions. Over an 8-year period, she held in executive positions with 2 global P2P audit firms. With over 8 years of management consulting experience, she designed a new fiscal closing process for a large enterprise, implemented a self-audit tool for a global P2P audit firm, designed and implemented 2 certification programs for controllers and P2P professionals, and supported the development of a B2B trade directory for a global bank. She partners with one of the largest global ERP firms to implement the Risk Cloud application, which automates analysis and supports the continuous monitoring of ERP security, configurations, and transactions. She consults with several global P2P automation solution providers and provides best practices and educational content. She's also authored Internal Controls Toolkit and the Fast Close Toolkit for Wiley F&A, which were published in 2019. And in early 2021, the Controller's Toolkit and the new AP Toolkit were published. Along with Chris, we have Anand Misra. He's the Director of Product and Partner Marketing at Tipalti. Anand was the Director of Product Marketing at Oracle NetSuite before Tipalti and has over 15 years experience in product marketing and product management. He's helped launch multiple new products over the years, and before joining Oracle NetSuite, he was a Senior Product Marketing Manager at ADP. His work experience also includes roles at Thomson Reuters, Wolters Kluwer, and a few startups as well. Anand has a BS in biology and an MBA in finance, which is kind of a cool collection of education. So I love that. Chris and Anand, I have to say you have such great backgrounds, and we are thrilled that you are here today to share some of your experience and, of course, your knowledge with our members. So with that, I'm going to hand it off to Chris, I believe.
Yeah, thank you very much for that great introduction. And I'm glad to be here today again with Tipalti. And this is a great topic and very apropos. We always worry about how much our AP process is costing us and how to turn that process really into a good benefit for your company. So our topic is Time is Money, and our sponsor, as mentioned, is Tipalti. And I won't go through my bio again because Angela did such a good job doing that. But as far as our agenda, we'll go through a brief introduction, defining the pain points of a manual AP process, and then we'll take a look at what processes does AP impact. And it's not just, again, in its own silo or process silo. We'll take a look at how it impacts the financial close, cash management and forecasting, internal controls, and what changes and how does the process get enhanced within an automated approach. We have the time savings calculator for you to take a look at. It's a template on how to calculate time you can save with automation. Of course, that equates to saving money. Tipalti does have their own calculator as well, but this is just another tool you can put in your toolkit. Okay, if we get into the introduction, we've got some myths with AP automation, and working with some of my clients over the years, I've heard this many times. And the first myth is that the implementation and integration process, they're too lengthy and cumbersome, and the solutions are too expensive and they don't fit in with our business model. And no one will use the solution. And then there's sort of a feeling that, well, gee, with automation, fraud is going to be 100% alleviated. The chance of fraud will be diminished. However, fraudsters, being as savvy as they are, can find a way to still impact the AP process in a negative way. The next one is I'll lose my job. And this is sort of related to any change management, any new process improvement, any changes in an organization. You have this feeling. I've been through a lot of M&A activities over the years, and that's the first thought, that people are going to lose their jobs as the merger is completed. Jobs may change, of course, and may be enhanced for the better, but in a lot of cases, jobs will not be lost. And the one that I hear so often is, our manual process works, why change it? And that kind of equates to, well, gee, this is the way we've always done it, and why should we change? And you can see that very complicated chart to the right is what a manual process looks like, and we'll go through that in a lot of detail. If we think about automating the finance function or reshaping the finance function, there are 4 digital technologies that will help to enhance the future of finance. The first one is automation and robotics. Next one is data visualization. And what I really like about this one is that we're looking at giving end users real-time financial information. And this is the first point I'll make, is that if we get everything in AP correct, we know pretty much that we'll get to that real-time financial information and correct closing information in a timely and accurate manner. The next technology is advanced analytics, and that's to accelerate decision support, and we'll talk about some of that as we go through the slides. And the last one is advanced analytics for business, and this is to uncover hidden shareholder value and growth opportunities. And it could support tracking resources and creating predictive models for early warnings. The source of this great information is McKinsey, in case you'd like to find out more about what they're saying about reshaping the finance function. That's kind of to lay the groundwork. And what our first polling question is, what do you think are the biggest risks with a manual AP process? And the first one is duplicate payments to suppliers. Next choice is poor internal controls. Invoices are not properly approved is the third selection, or D is all of the above. And we can take a look at the answers as they're coming in.
Yep, so we're collecting those responses right now, Chris, and audience, thank you so much for answering quickly. This will help us get back to the conversation. And we're going to just keep it open for a couple more seconds, and then I'll share those answers with you, Chris.
Okay.
And the rest of the audience as well.
Perfect.
Excellent. Couple more seconds, audience. Okay, here we go. So it looks like we have 7% that say duplicate payments to suppliers, 12% poor internal controls, 10% invoices are not properly approved, and 71% said all of the above. Back to you, Chris.
That's great, and that's pretty much what we see when we ask these sorts of questions. And it's really all of the above, because if we're thinking about preventing duplicate payments and enhancing internal controls, which really go hand in hand with the prevention of duplicate payments, and then the approval process, that's again part of automating the invoice process and actually taking a look at automating workflow. All right, so why do we automate? And we start with asking the question, where are the pain points? And some of this, the polling question actually helps tee this one up, because sometimes in implementing any sort of system, whether it's AP automation or any ERP initiative, there needs to be a look at prioritizing where you start. And I usually ask my clients to focus on what the biggest pain point is. And if we take a look at these 7, and I'm sure there's a lot more here, but manual workflow, and that's chasing a manual invoice, of course, and making sure the right people are signing off on it. Out of office approvals are delegated properly or not available approvals. And I've seen in the past some invoices sit on someone's desk because they're not available. And limited process control and visibility can create an environment of risk and fraud. And that's absolutely true. If we don't understand our current process, it's hard to automate. But again, if you don't know what your process is looking like from an end-to-end perspective, you don't really focus on the right internal controls and visibility of that data. Payment challenges, and we worry about paying late. And of course, there's sometimes a situation where we might pay early, and that could be not a good thing if we're not taking those supplier discounts. And number 4, of course, is missed early payment supplier discounts. And of course, lengthy reconciliations and payment cycles. And number 6 is suppliers have a lack of visibility to payments. And number 7, adding automation to the procurement process. And what I like to think about is an end-to-end, not only AP process, but what does the procurement process look like if we think about a P2P cycle. So again, I'm sure there are many, many other pain points out there that you can equate to, but these are some of the ones that we hear the most commonly. And if we look at your AP process looking like a treasure map, and this is another a look at that very complicated model that we saw a few slides ago. So if we have a manual process, the supplier generates the invoice, and it's either sent in a manual process with postal mail, paper invoices, some PDF files, maybe sent via email. And sometimes moving closer to automation, we look at invoices being sent via an XML format. All right, so what happens next? And this is what happens pretty much in a manual AP process. The invoices are routed to the AP department. If they're coming in through the post office, invoices are rerouted by postal mail. They're scanned, and missing inaccurate information is chased down with manual validation. The three-way match is pretty much manual. So there's a lot of investigation, and there's a lot of chasing paper here that adds to some of the cycle times and costs that I'll talk about also in a minute. And there's a lot of checks and balances that add to the drama here. Looking at the manual verification, searching through emails, paper files, making calls, that manual to a three-way match. And sometimes if it doesn't work well, if you're not completing the match, you can't get the approval that you need. So it's a lot of back and forth, and again, it does look very much like a treasure map. Finally, it gets approved, and you can see that the payment gets generated. Hopefully, it's an automated payment with either a P-card payment or ACH. But the biggest challenge with this treasure map approach or manual approach is how easy is it for you to go back and verify any part or all of the above. So from an audit trail, if we think about what an automated AP process does, it's adding that audit trail that can be used to go back and validate information and do things like check for those duplicate or erroneous payments. Okay, so that's your manual process, and what we will look at now is what processes does AP impact. And when I spent a couple years or so in accounts payable, I was recruited to go straighten out a pretty much a perfect storm. We had just implemented a new ERP and outsourced the process. So there was a lot of work to do to do a lot of cleanup and get back to the basics. And if we look at what does AP impact, and this is where I learned that you can't look at processes in a silo and have to focus on people, process, technology, and look at how AP impacts the closing process. I also pulled some information from Strategic Finance magazine, and if we look at 10 ways to cut the real cost of accounting, auto-certify reconciliations, cut the manual data extracts, reduce waiting on closed tasks, auto-match transactional detail, which fits in with our AP automation discussion, automate journal entries, use an approval workflow engine, again, one of the key components of AP automation, centralize supporting documentation, and identify exceptions automatically. Why wait till the close to find an exception or an issue that needs to be addressed? Identify those automatically, shift to auditor self-service, and streamline any intercompany transactions. So as we go through how AP impacts the closing process, just take a look at an end-to-end process flow of what AP looks like. Well, it starts with the supplier master and identifying that supplier correctly, doing the validation, obtaining W-9s or W-8s, doing TIN matching or VAT validation, supplier validation and compliance screening, and then performing that screening on a periodic basis. And just to kind of give you a heads up on what that compliance screening means, it could be screening that particular supplier against Office of Foreign Asset Control, Office of Inspector General, and many sophisticated companies are actually doing some FCPA, Foreign Corrupt Practices Act screening to make sure that we're not paying bribes to foreign officials. Now, if we look at invoice processing, there's the three-way match that we talked about, e-invoicing, manual invoicing, receipts, ERS. Another type of alternative to consider is a PO flip. P-card process and T&E processing are usually included under the realm of accounts payable. And with both of those processes, we're looking at processing P-card transactions and administrating the controls for the P-card usage with reporting, analytics, and metrics. And with T&E processing, this is looking at audit and controls, and again, reporting and analytics, and having an administrator or a processor highlight those anomalies or those potential fraudulent transactions that could occur in both P card, procurement card, and T&E processing. The payment process is getting that payment approved, and as mentioned with ACH, P card, or wires. And in a lot of cases, we still have payments with manual checks. And many companies, just to mention, have outsourced that payment process to a third party. So they're not worried about doing bank reconciliations or escheatment processes. And then auto payments can be established for anything that's a recurring payment. With accounting processes, this is where we look at the fiscal close, ensuring those accruals are correct, general ledger reconciliations, and of course with correct AP payments and correct subledgers, we know that cash management can happen accordingly. Clearing accounts should be reconciled. And then if we think about accounts payable, there are actually some key customers. One is the supplier, of course, but also internally, procurement is a key customer of the AP process. And that's where we start looking at service level agreements and strategic sourcing. And many AP organizations are moved to a shared service center. And I worked with a client, and what they had established for their shared service center was billing out for a transaction. And so it could actually become a moneymaker for finance with we're billing out for any transactions that are processed in shared service center. But that does mean from a shared service center approach, we need to have very, very distinct and very well-defined SLAs or service level agreements. And last but not least, we always, on the back end of our process, need to consider reporting, analytics, and metrics. And if we know where we stand today, we know where we can focus on automation. And if we're seeing very high cost per invoice and very high cycle times to process an invoice, well, that could be an area that we can focus on enhancing as we go through the automation process. And I'm going to give you a little bit of benchmark data. The IOFM, the Institute of Finance and Management, did a benchmark study a few years back and came up with a range of costs per invoice, starting with $1, of course, for those with automation and best practices, up to as high as $21 to process a single invoice. The APQC did a survey around the same time frame, and their costs range from $2.07 to $10 to process an invoice. And then Ardent Partners also did a survey within the 2019 timeframe, and they just came up with an average cost. And they indicated that to process an invoice, it's $11.57. So you can see, again, moving from automation or manual to automation, how costs can be enhanced. I mentioned the P2P process, and this is where we're starting to tie in procurement and receiving with accounts payable. And there's always been, over the years, sort of a love-hate relationship between procurement and accounts payable. And I think as we look at automating and streamlining processes, controllers and CFOs like yourselves are beginning to see how procurement and AP go hand in hand. And procurement is focused on supplier selection and management, sourcing, contract management, purchasing and ordering, and of course receiving is the receiving process. And that's ensuring that goods and services are received properly and in a timely manner, and the receipt is processed. And that just kind of gives you an end-to-end overview of both AP as well as P2P. All right, so if we look at the financial close, and as mentioned earlier, what we're focusing on in the close is transaction accumulation, reconciliation, and subledger close, corporate close and consolidation. Both of those processes fall under what I call close and consolidation. And then the last bit is analysis and reporting, often called the final mile. And as we think about automation, we look at, again, people, process, and technology. And what happens with a lot of processes, we focus so much on the technology that we forget to look at the process and the impact on the people. So very key, if we think about our pain points, to include people and processes as we're going through the automation journey. And what is really a good way to look at automation, whether it's in AP or AR or the financial close, we're trying to get to one source of the truth, not separate spreadsheets that somebody might have to process an account reconciliation or to reflect accruals, but to really get to a system of record or one source of the truth. Okay, the next process that we'll consider is cash management and forecasting. And when I was in accounts payable at Compaq, which became Hewlett Packard, we spent so much time with the cash management organization, and there were always questions about, well, you know, what was the supplier paid? Did they pay us? Did they have any outstanding invoices? Can we forecast cash? And looking for, you know, again, very large invoices and the impact on forecasting and cash. And certainly if we get into a consideration where data is not accurate, then there's a lot of time spent trying to validate and reconcile forecasting in the cash management process. And that kind of leads to the value of spend analytics. And even to simplify that a little bit, we want to think about who are our suppliers? Who are they? What are our products and services? What are we buying and who is the buyer? And what's the cost? How much have we spent and what can we save? And that's where we talk about service level agreements and discounts and everything like that. We want to make sure that we're actually tracking that data properly. Supplier performance and quality. How are our suppliers performing? And looking at improving cash management and forecast is going to help us drive that cost optimization from a corporate perspective, supports controls and compliance, and identifies additional opportunities to streamline the P2P process. Enables supplier and contract management processes, which has been a challenge over the years for procure to pay, and often called source to pay in some instances. Also providing strategic sourcing initiatives. And I used to do these types of studies when I worked for procure to pay audit firms. And it's really to tell a client or a company where there are opportunities to combine suppliers. A lot of cases it's combining office supplies, it could be combining computer purchases, temporary resources, and there have been huge opportunities for cost savings by looking at these strategic sourcing initiatives. Also identifying those strategic suppliers that you might want to team up with and establish a relationship with, and then certainly build in that service level agreement process. So with spend analytics, we're supporting better and more rapid decision making, and all of that is really supported by the correct data and tools. All right, if we think about cash management and we think about the procure to pay process, and it starts with identifying where the end user procurement or purchasing and accounting meet. And what we're really trying to do is take down some of the silos and look at that end-to-end process that, like we saw a couple of slides ago. So with procurement, we're looking at item groups, role-based requisitions at the expert level, buyer pools, quotes, and contracts. And with finance, we're looking at having all that information fit into general ledger and cost centers and a high level of accuracy and timeliness. Certainly budgets and control and cash flow management, as well as commitments and accruals. So we're really identifying where accounting, purchasing, and the end user meet. The end user starts out with, well, gee, I need to buy something. Where can I and may I request an order? And that's where we start looking at approval for the PO, certainly the requisition, the PO, and of course then the invoice and payment. The other way to think about AP automation is there are 4 pillars to support zero-touch processing, or what I call nirvana, or true AP automation. And the first one, going back to our previous slide, with end users and requisition, I just want to find out and buy what's needed. The buyers, the procurement department, finalize items and conditions with vetted and qualified suppliers. And they could be going out to do a request for information, a request for proposal, or a request for quote. Analyze company spend, and the suppliers provide the contracted goods and services and submit invoices. hopefully in an automated fashion. And then the fourth pillar is finance. And if we look at accounts payable, we're receiving, matching, and paying invoices, and then reporting the total company spend. And if we're lining up these four pillars and moving to zero touch, that treasure map that we looked at earlier goes away, and we have a streamlined and end-to-end process. All right, we have polling question 2. And this is an interesting question that I like to ask. And the question is, why is the true value of the AP process often overlooked? And the first selection is the clerical nature of the process. The AP staff is always a target for downsizing. We're moving to a P card process, and D, all of the above.
So Chris, once again, we'll give the audience just a couple of seconds to answer that. Again, audience, if you would be quick about answering, we can get back to this great presentation that Chris is offering out to us. Couple more seconds, and then I'll share that with you, Chris, and of course the audience.
Okay, perfect.
Couple more seconds, audience. Okay, we are going to close that and share that with you, Chris. So it looks like 49% say the clerical nature of the process, 3% the AP staff is always a target for downsizing, 0 said we're moving to a P card process, and 49% also said all of the above. So there you go.
Oh, wow, that's great. Yeah, and I got to tell you, when I was asked to be the director of worldwide AP for Compaq, I was sort of thinking, oh man, I don't want to work in accounts payable. And I was thinking, well, it's the clerical nature of the process, and AP is always a target for downsizing, and there's always change. But really learning how the process worked and understanding how it could be enhanced, even quite a few years ago, was probably one of the best decisions I ever made, and one of the best opportunities I ever had professionally. So, yep, thanks for answering those questions or that poll. All right, I'm going to take a look at the third process that AP influences and how it can be enhanced. And this is where automation comes in as a discussion as well. And we must really like these 4 pillars, because here's another 4 pillar. It starts with best practices to consider for AP, risk mitigation by automation, validation and accountability, reinforcement. And if we start with best practices, and we have some examples for you for each one. So the first pillar being best practices, and it starts with an automated supplier onboarding process. And many of you know that onboarding a new supplier is extremely cumbersome. I don't have a lot of benchmark data on it, but I know it can take several days to vet and validate a supplier. And many companies are using trade directories and naming conventions for supplier master data, so we don't end up setting up duplicate suppliers, and that often results in a duplicate payment. Another best practice is segregation of duties and system access controls throughout the P2P process, making sure that the same person can't set up a supplier and a supplier master, pay that supplier, or process the invoice and issue a payment, and cover their tracks, possibly with a journal entry. So segregation of duties and system access is one of the best practice examples that I've seen a lot across the board. Delegation of authority approval with automated workflows. So it's interesting, you can't really automate your workflow approvals if you don't have any sort of policy that says that a certain level within your company can sign off on a certain dollar amount for a certain type of transaction or company commitment. Controls for bank account changes and payments, and accountability and self-audits. Now just go back to bank account changes. There, again, what a fraudster often does, or even an employee, is change a supplier bank account to either an employee bank account, or in some cases, someone breaks in and changes that bank account. This is a case of a big fraud not that long ago, where someone hacked into a system and changed the bank account data for a supplier, diverted the funds outside the country. And what I recommend as part of an internal control and a best practice is to compare your supplier master against your employee master, working with HR to do that, to do things like validate bank accounts, address, TIN, Social Security numbers, and see if you have any matches, because again, fraudsters are not only external folks, but internal folks as well in the case of occupational fraud. The next one is risk mitigation by automation. And obviously, as we talk about best practices, we look at how can we automate our processes within accounts payable. And some of this we talked about already, but just to give you a list, and this is not the total list of options that we have for automation solutions, but if we take a look at supplier portals, e-procurement, e-invoicing, things like PO to invoice conversion, document management, invoice scan and data capture, automated matching, automated workflow approvals, e-payment, system access verification tools, and to make sure that everything is working properly is an accounts payable self-audit tool. And what we're doing here is we improve cost controls and compliance. We can have our AP team focus on analyzing data, focus on doing self-audits and fraud prevention and compliance, agile payment prioritization, pay early or pay on time for that discount opportunity, supplier relationship management, and technology expertise. And that's what automation can do besides prevent fraud and enhance internal controls. Okay, moving right along, we have our next polling question. How does automating the AP process reduce risk? And the selections are the AP approval process is timely and accurate. There are fewer accruals and month-end corrections, and there are fewer opportunities for collusion, and D, all of the above.
Once again, audience, we appreciate your quick responses, and they are coming in, so thank you for that. And we'll close it in just a couple seconds and share that again with you, Chris.
Okay.
Couple more seconds. Great. And we're going to be closing the third poll. And what did we learn? 3% say the invoice approval process is timely and accurate. 3% also said there are fewer accruals and month-end corrections. 8% there are fewer opportunities for collusion, and 88% all of the above.
Very good. That means that everybody's been paying attention, because what automation really helps with is not only reduce the cost, as we've been talking about, but really ensure that the process is fine-tuned and there are fewer opportunities for collusion and fraud, and the accruals are going to be pretty much diminished with correct approvals and everything being timely and accurate. We're not chasing those paper invoices. And a little sidebar, I once was talking to a client about the definition of automated invoices. And they said, oh, well, gee, we're either getting them in on spreadsheets or we're getting them in a PDF file. So we're like fully automated. I said, well, doesn't someone have to take that information or that file and key it into your system? Well, yeah. I said, well, it's not really automation. So one thing that I didn't mention, but it's a key point, is to have a common definition of what AP automation really means to you and your company. All right, if we look at process control, and this is validation and accountability, and this is where we get into delegation of authority workflow with thresholds, minimum threshold, not too low for low value purchases. And the reason for that is fraudsters take advantage of purchasing several low dollar items that can add up to a lot of money. Multiple signatures required at certain levels. In some cases, 2 board members to sign, very high dollar values, and additional specialist approval steps for special goods and services. Segregation of duties. Buyers cannot receive goods or services. This means somebody in procurement can't be receiving a good or services, and users cannot approve their own documents, and that includes POs and invoices, one-time supplier record. And what happens here is sometimes a supplier will try to test the waters and get set up a supplier even though it's not a valid supplier. But there are tools in place, particularly some of the self-audit tools that I mentioned, where you can go in and check out those one-time suppliers to see if they're actually valid. Off-site delivery addresses, and these could require an additional workflow steps and could appear as an exception on an audit report in a self-audit process. Real-time audit process, and this is what some of the technology can provide, offering audit reports, alerts on a daily, weekly basis to mitigate risks. Now, one thing that's interesting, if you're using self-audit tools, means somebody's got to look at the data, go through, identify, and validate if there are true exceptions. But a wonderful world in that zero-touch processing that we looked at earlier, getting those alerts where someone's got to take action is a wonderful bit of technology that is certainly very helpful. All right, the next bit is looking at 6 anti-fraud controls, and certainly as part of automation, we can look at a robust code of conduct, tone at the top, strong internal audit department, internal controls, and a self-assessment process across the P2P cycle. Automation of those manual processes to alleviate risk and manipulation, certification of financial statements, and segregation of duties and management reviews of internal controls, processes, and transactions. And there are these 6 anti-fraud controls. We're actually helping out with a 50% reduction or greater reduction in both fraud losses and fraud duration, the duration of a fraud. And those controls could be automated and certainly implemented for procurement, supplier master, goods receipt, invoice processing, and payment, as well as accounting. And this data is coming from the Association of Certified Fraud Examiners from a report that they did last year. Okay, the last pillar is reinforcement. And it's really all about training. And if we have training, if we're using a telephone hotline with email for whistleblowers, if fraud is suspected, that is really going to help with that fraud awareness and fraud prevention. So if we look at training, defining training needs, training objectives, select the target audience, determine the methodology, and those could be things like inspector or instructor-led training, videos, computer-based training, online courses, webinars, determining the content and schedule training and evaluate the results. This is also from the ACFE. And you can see what our concept here is with these focus on the right controls and automating those controls. We're going to really be saving time and certainly be saving money. All right, we have our last polling question. And the polling question is, have you automated any components of your AP process? The selections are yes, no, in process, and no plans for AP automation.
Great. And again, our audience is so quick, they're paying attention. We love that. So audience, just a couple more seconds and we will close the last poll. Couple more seconds. Okay. And we will close that poll. And so the answers are 45% said yes, 28% said no, 23% said they were in the process, and 5% said no plans for AP automation. That's probably good news, I would imagine.
That is very good news. And thanks for answering that poll. That gives us an indication of what your plans are and where you are as far as in your AP automation journey. So thank you very much for that. All right, so what changes in a AP automation process? If we take a look back at what the universe looks like and we think about what can be automated and, again, equate this back to your pain points within accounts payable, well, what we can focus on automating is certainly the paper invoice receipt, document data capture, electronic invoicing, content management, matching and workflow, and that results in timely data and reporting and analytics. So what we're getting closer to is alleviating that treasure map approach, and we're getting more to a streamlined end-to-end process for accounts payable that's focused on getting to reporting and analytics a lot quicker. All right, so if we think about the automation journey, and if we look at procure to pay for just a second, because again, we don't want to think about AP and a vacuum, but if we look at those 10 solutions, our 10 alternatives, if we look at procurement, receiving, and accounts payable, here's where those line up. For procurement, there's e-procurement, PO to invoice conversion, receiving automated matching, and accounts payable, supplier portals, e-invoicing, document management, invoice scan, data capture, automated workflow approvals, e-payment, system access verification tools, and accounts payable self-audit. And getting to that target of compliance and control, process efficiency, and cost savings is where we want to get to. And it doesn't happen overnight. And some of the tools that we'll mention is if we look at, and again, this is all just sample data, but if we look at what is the time how is the time going to change for what we're processing for invoices? So with this calculator, we look at the number of invoices processed per year, AP associates dedicated to invoice processing, and the number of invoices processed per year per FTE. And just by putting in some sample data, and we found that we could possibly save 73 working days per year. And what that equates to in dollars, that's really up to what your fully loaded FTE number is. But if we start peeling back, the onion a little bit, we look at what we're spending for the time we're spending for invoice processing, and that's obtaining approvals, and dedicated to invoice processing, the time and hours, and then usually we have quite a bit of analysis, remediation, and reporting that are driven by the ongoing reconciliation process in a manual environment. And that's how we came up with, again, some of this data. And as mentioned, Topology does have another approach at an ROI calculator. And this is just looking at time savings and not dollars. That can certainly be added in another version of this. All right, I'm going to turn it over to Anand. And Anand, you can go ahead.
Thanks, Chris. That was some real great information on the real cost of manual AP. So just to touch upon what you just ended with, Chris. So we at Topology can also help prospects with both operational and as well as cost savings gained from investing in our solution. So please feel free to reach out to us for details on our ROI calculator. And in the next 5 minutes or so, I will give you a high-level overview about Topology. So if we can move to the next slide, please, Chris. So as a company, we are really focused on two principles, right? The first principle is helping your finance teams move beyond manual payables processes to more of strategic initiatives. And second, ensuring that our customers are successful in the long run. So we are a leading global payables automation solution with hundreds of customers, some of which that you can see on the right side of your screen. And we take pride in serving our customers and are proud to have a 99% retention rate. The screen says 98, but it's actually 99, with a 98% customer satisfaction rate. So this is a testament to our business model and our commitment to our customers to achieve their business vision. And we transact over $20 billion annually for well over 4 million pays around the world. And if you're wondering what Topology means, so Topology essentially in Hebrew means we took care of it, which implies that let us take care of your global payables operations, which allows you to focus your resources on more value-added activities. So we are one of the only 24 companies in America who made both the Deloitte 500 and Inc. 5000 for 3 straight years. And I also want to add that IDC, which is one of the largest independent analyst companies in the world, recently named Topology as a worldwide leader in mid-market accounts payable operations. You can move to the next slide, please, Chris.
Okay.
Yeah, so, at Tipalti, we look at payables holistically, not just the invoice processing piece or the payments piece, but the end-to-end function and automating those. So as you grow and become global with multiple subsidiaries, global tax and regulatory compliance, fraud and risk to manage, you essentially won't have to bother about those since we take care of them. So what you see on your screen is the Tipalti wheel, which highlights a philosophy that if you put a robust system in place now, you will not outgrow it as you grow. So we provide an end-to-end solution to manage the entire payables operations. So it starts with supplier management, with self-service supplier onboarding, which includes over 26,000 built-in rules and validation to ensure payment data integrity. This results in reduction in payment errors by over 66%. We have a KPMG certified tax compliance engine, and we automate the collection of W-9 form and also the more complex W-8 series of forms. And at year end, we generate 1099 or 1042S tax prep reports that Chris talked about essentially, and calculate any necessary withholdings as well. The solution includes invoice processing with OCR technology and machine learning, as well as managed services to basically ensure touchless or straight-through invoice processing, along with built-in advanced approval rules. We also have 2- and 3-way PO matching for PO-backed invoices as well. We are a licensed money transmitter and a regulated financial institution and pay across 196 countries in 120 currencies with 6 different payment methods, and also do sanction screening to ensure that you're not paying anyone who's on a government watch list somewhere. We have AP reporting with more than 20 out-of-the-box reports and real-time multi-entity payment reconciliation with your ERP system, which basically ensures faster financial flows. And that you saw earlier that Chris touched upon as well as one of the key value added or benefits of automating your AP end to end. That now that you see on your screen is our built-in early payment solution, and you can pay suppliers earlier without adding to your workload or impacting your working capital. The one last capability that I want to highlight that you see under the service foundations below is our FX solutions capability. So you can save time and money and manage risk on foreign exchange or FX conversions with Tipalti. So we do both spot currency conversion and FX hedging, and it's ideal for companies with multiple global entities or subsidiaries and suppliers who you may be paying in different currencies. And of course, you can manage unlimited number of entities within the same instance of Tipalti. So hopefully that gave you a little bit of a flavor of who we are and our capabilities. And with that, it's back to you, Chris.
Okay, thank you very much. All right, we now have time for our Q&A session. And Angela, do we have any questions that we can address?
We do. So glad we have an attentive audience today, and so glad for that. So I'll just go through these, and for any of the people who have asked a question, if you need to stay another minute or two, please do. I'm sure our speakers would be happy to just make sure to answer the questions. So the first one, Chris, is there a way procurement can determine if the end user request is available internally?
Oh, that's a good one. Yeah, I mean, that's going to depend upon data and what's available. And I would say it's going to be driven by the roles and responsibilities that are established by the buyer. And, again, it's having a very strong procurement organization that knows where to look to find out if the solution or the SKU or whatever they're looking for is available internally. And, again, that's part of why we typically do requests for information or requests for quotation or requests for proposal to not only look externally, but to look internally to see if any sort of functionality or solution is available inside your company.
Great, thank you for that. So this one, probably kind of the same answer with that unique, but how often does the invoice approver need to be reminded to approve the invoices?
How often? Well, typically it depends on how you set up your workflow. And I've seen in some cases that the approver is reminded, maybe once or twice, and it gets taken care of. But if you set up a type of exception process where if the approver doesn't approve within, I'm just going to throw out there, 5 business days, it automatically gets routed to the next level in the approval chain. And those are business rules that you would need to think about, like what's your acceptable level of getting an invoice approved. If it's more than 3 days, well, that's something you would build into your rerouting process. You can also build in amounts that need to be rerouted as well. And what we try to also look for in workflow approval is to make sure that we're not splitting POs so that we can bypass the standard approval process.
That's great. That's great. So it's kind of on their end as well. So that's good.
Yep.
Yeah, important, because if they already have a process, they want to make it better, there's another way to do it.
Right.
Another question, is there an electronic filing system for electronic supplier invoices or scanned supplier invoices?
A lot of that is going to be dependent upon the tools that you're using. And there's certainly been an evolution in, managing files over the years. And I've seen a lot of this evolution myself. So a lot of it's been, started with shared drives, and then we've got SharePoint, and then many solution providers actually have a directory that they provide. So it's really going to be dependent upon what type of tools that you're using to support your process.
Great, yeah, that makes total sense. Finally, and I think I know the answer to this, but I'll just let the audience know. One of our audience members says that they love this, they feel like it's very informative, and they were wondering if we'd be sending out the presentation. So I just want to remind our members that we record this and it will be in the membership portal. And I would imagine, Chris and Amand, if somebody wanted more information or to have this, would you share that with them if they're looking for it?
Oh, absolutely. Yeah, if anybody, goes without saying, if anyone has any questions on any of the points we talked about, feel free to send me an email, and I'll make sure it gets directed to the right person, or I'll address it myself.
That's great.
And I would like to second that as well. So from our side too, please feel free to reach out to us, and we'll respond as soon as possible.
That's great. Thank you, Anand. And I figured that I always know that our audience does know that you are willing to do that. So always good to remind them. One last question, because we have just a couple of minutes. Maybe just go back to this. What best practices should I consider before I look into an AP automation?
Yeah, typically what I like to recommend is, the first one is, understand your end-to-end process and see if you can identify any potential process gaps and equate those back to your biggest pain points. And I had I did a blog a couple of years ago where I tried mapping the common solutions to existing pain points. And you can see where in a lot of cases that one solution may alleviate several pain points. So having a good, end-to-end view of your process is key, because then you can figure out, okay, where's the pain and where should I be focused on automating. And the second alternative is the second approach is make sure you have some information on metrics, because if we look at some of these calculators that we discussed, you have to know where you are today. What's your cost per invoice? Is it in that 10 to 20 some odd dollar range, or is it in that lower, best practice range? And are you really just looking at maybe reducing risk? So understand your costs, because then as you automate and as it continues to help your company, you'll see where you can actually improve cost or reduce cost and improve cycle time. That
is fantastic information. Thank you so much, Chris. and actually Anand. So we're right basically at the top of the hour. So I just want to say to our audience, thank you for joining us today. And I really do hope you receive some valuable and practicable information. Again, the presentation is here and you are welcome to look at it again, whether it's at the recording or you know, getting it shared by Chris and Anand. And of course, if you'd like to continue the discussion as they both already offered out to you, I really do encourage you to reach out to Chris or Anand. I know they'll be happy to answer any in-depth questions that you may have, or maybe some unique to your company questions. And sometimes that really does help you make a decision. So I highly recommend doing that. And with that, we are at the top of the hour. So I will say this does conclude the presentation on Time is Money. How much is your AP process really costing you? Stay safe and stay connected. And again, Chris and Anand, thank you so much for sharing your experience with us today and, of course, your knowledge. We appreciate that. And hopefully we will see you soon.